Robinhood is expanding deeper into global crypto markets. IBM is making a multi-billion-dollar bet on AI infrastructure, and Binance just set a new standard for regulated crypto exchanges. It's December 8th. Let's break down what's moving emerging tech today. Good morning, everyone. Welcome back to the Blockhash podcast in the first segment of the Blockhash morning brief, which we're going to start doing probably every day. We'll scale up to that at least Monday through Friday as we get this going. But want to do it to give you a bit more insight into markets, crypto, AI, and what tech is building in terms of heading into the future. So want to cover things in under 15 minutes or so on a daily basis and kind of give you the what's to know and help you start your day off right. So let's dive into it. To kick this off, we're going to look at the top 3 headlines for today. The first one is around Robinhood making a major move into Indonesia. They just announced this entry acquiring a licensed brokerage in a registered crypto trading platform, opening the doors to one of Southeast Asia's largest and fastest growing investor markets. Indonesia has around 19 million people participating in capital markets, nearly 17 million trading crypto. That means Robinhood is plugging directly into a market where crypto isn't fringe, it's actually mainstream. This isn't just a customer expansion, it's a positioning play. Southeast Asia is where the next wave of digital asset adoption is happening, and mobile-first users, fast-growing economies, and a hunger for financial access. If Robinhood gets this thing right, we could see fresh liquidity and new real retail demand flowing into crypto and emerging tech, not from the West, but actually from the East. The next headline is about IBM. They just confirmed that they will be acquiring Confluent. What is Confluent? It's a real-time data streaming giant they just got for $11 billion. That might sound like a traditional enterprise deal, but this is actually a bet on the backbone of AI itself. With real-time data hanging and handling is the limiting factor for AI scaling when it comes to things like training, interference, automation, analytics. If the data pipeline lags, AI breaks. So this acquisition signals the next war isn't around the AI apps that we see, it's actually around the pipes powering them. So legacy tech wants in, and infrastructure is becoming the most valuable side of the AI equation. The last big headline to kick off today is around Binance. They just did what many thought was impossible. It secured a global regulatory approval under Abu Dhabi's ADGM framework. Very tough to get, meaning exchange, custody, clearing, and brokerage under one regulated umbrella. This is not just a compliance win, this is infrastructure for institutional capital. If crypto is ever going to become part of global financial plumbing, this is how. The knock-on effects: faster integration between banks and exchanges, easier custody and compliant trading for funds, more credibility for digital asset markets, and most importantly, it puts pressure on other major jurisdictions to step up and clarify their stance. So big one. The big takeaway: retail access is going global, AI infrastructure is accelerating, and crypto is gaining regulatory legitimacy. These are structural signals, not just noise. Next up, we're going to talk about the macro and equities snapshot for today. Equities markets are holding pretty steady to start the day. Futures are green ahead of the next Federal Reserve update, which is coming on Wednesday. So over the last few weeks, the S&P 500 is up about roughly 5%. Not too bad. Investors are positioning around softer inflation and the increasing likelihood of rate cuts, which is probably going to be 25 basis points. A lot of us are hoping for 50 or more, so we need to cut faster, but we'll see. But here's what's unusual. Gold is up massively, nearly 60% this year. As we kind of know, at the same time that risk assets are starting to climb, or at least we think so. So usually when safe havens rise with stocks, volatility risk goes up, not down. So analysts are pointing to fragility. So if the Fed changes tone or data surprises to the upside, this kind of everything rally that people are calling it can swing pretty sharply. For emerging tech, this environment often is a offering of opportunity, but it demands timing, risk control, and selective exposure. Now let's dive into the crypto emerging tech market recap. So let's start with Bitcoin. Bitcoin is trading in the 91.3 to 91.5 range this morning, up about 2% over the last 24 hours. Crypto's rebound looks pretty broad. Nearly 90 of the top 100 assets are green. Market cap is back above 3 trillion. Structurally, here's what matters the most. Bitcoin is attempting to build a support base after last month's pullback, actually since October. Analysts are watching 84 to 88K as key downside support, and bulls need to reclaim 100 to 105 on strong volume to reignite a macro bull trend. We'll see if we can actually get there and where this actually takes us. A lot of uncertainty. Right now, momentum is driven less by new money and more by short liquidations and macro relief. That means further upside requires real inflows, not just short squeezes. Emerging tech tokens, especially those tied to infrastructure, are seeing early upticks. If Binance's regulatory path sparks more institutional activity, those could benefit most. The story is, stabilization first, is moving towards trend confirmation second. So yes, opportunities forming, but the market remains reactive and not proactive. So here's what to watch next. Heading into the rest of this week, again, markets are in a very fragile rebound mode. If macro remains supportive and institutional adoption signals strengthen, we could see a gradual uptrend. If volatility spikes or macro shifts, crypto could test lower supports again. So positioning and risk management are key. Federal Reserve messaging is going to be very important given the fact that Powell is on the way out. We have a new Fed chair pretty soon that will come into play, and the messaging there is definitely going to shift, especially with the talk about quantitative tightening ending, having another rate cut. We'll see how that caps off the year and foreshadowing, I guess, what we'll see in 2026. We need to keep an eye on things like the reaction to the bond yield, institutional crypto flows, and where those are kind of shifting and coming from. And then any follow-on moves from major tech firms in the AI and data infrastructure space, which are seeing a lot of capital being injected. So if macro cooperation continues, you might finally see a shift towards sustainable upside in both the equities and digital assets. But one bad macro print and the fragility gets exposed very, very quickly. So that's it for your Blockhash morning brief for December 8th. If you found this valuable, be sure to follow the show on Spotify, Apple, Amazon, subscribe on YouTube, wherever you listen and watch. Share with someone building in the space, anyone that is intrigued by the space, that loves to use it, that's a fan, and that's interested in emerging tech just in general. Be sure to share this with them. Stay sharp. The future moves fast, and we'll see you tomorrow morning for the next morning brief.